General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, so got me a Celsius. All right, target hit. We came to this area I was looking at yesterday. No, we respected 50% or consequent encroachment. Is this on caps locks? Okay, there we go. We respect the consequent encroachment of the H4 fair value gap. On the weekly, remember we was talking about that weekly fair value gap, nobody's closed inside. Nice rejection. Also note that we still ain't putting nobody's above this high. So it's been choppy, but it's still been not really breaking significant highs. We came back to this old weekly open price. The daily, I was saying this candle, we respected 50% of that. And there's no bodies inside this daily fair value gap. So no bodies inside the daily fair value gap. And we respect it. We can say that's 50% because 50% of today's Thursday, Wednesday candle. Respect the 50% of Windows candle, just the body. Break it down to the H4. Notice how we came to OTE of this larger dealer range. So note the respect of OTE. Which is 0.705. After that, no more. Price not really showing willingness to go higher. And we didn't leave any H4 fair value gap. So notice how it's rebalancing on the way down. Note how price is rebalancing on the way down. Not leaving any gaps. Also note how this candle closed past the last two candles. So we got us a 1 for 2 right here. Strong sell. The H1 Target, I'm looking at weekly open price, which is, hold on, let me zoom in. That's 71,027.50 or 21, excuse me. 027.50 weekly open price. This is my target for Friday. No, the sales have been slow. And the CPI kind of look like a problem, but I don't know. I don't think any data just not help that, you know? I know Apple is sliding though. Seen that on the news. No, the sales have been slow. One thing else I did like was this, as far as like this weekly, this previous week's low. I do want to see that get hit, but that's not low hanging fruit because that's right here. Low hanging fruit would be weekly opening price first, and then I would look here for that previous week's low. If we break through that, then I could start looking at stuff below, you know, because this week started off with a sweeper sell side, failure swing, OLR type stuff. That's that on that tomorrow, Friday. Y'all have a good day. All right, peace.